Good morning, guys. It is just after 10 past 9 on Monday, the 31st of October 2022. Sorry if I'm a bit hesitant. I'm just looking at the output stream and I'm getting a couple of warnings there. Hopefully that'll settle itself. That looks a bit better now. Okay, so let's have a look at the market. First thing that catches my eye is the green colour there for the current return. Currently just sitting positive for the portfolio 1.2% this morning. As you can see at the bottom here, if we look back a week ago, we're currently up 0.27 on a week ago, and we're currently up 2% on a month ago. However, as I've pointed out before, this sort of roller coaster effect that we've seen recently may well continue. I suppose it's true to say that this last dip doesn't appear to have been just as deep as the one before. So there's maybe some hope to be had there. We've got some notifications on the left. Have a look at that just to see. So there's more talk about earnings. I suppose typically where earnings announcements are going to be made, if that's expected to be good, I think you would tend to see a share price increase prior to the earning announcement. And the inverse, obviously, if the result is expected to be poor. And then, of course, depending on whether the predictions were right or wrong, you would either see continuation of the same move, or indeed an inversement. Just depending on the individual result. So we're talking about biggest stocks, we're talking about high volatility. I'm not sure what INTC is. Oh, Intel. Intel jumps 8% in response to earnings beat and future cost reduction plans. Okay, so basically Intel is looking like a better prospect. Because they beat their earnings target, and they have announced plans to reduce future costs. So in other words, they should be in a healthier financial position than they were before. Here's the thing about Pinterest: surges 13% after topping analyst estimates for results and monthly users. Okay, so two sort of technology companies there. One, I suppose you might say, more to do with social media. You maybe not see any mention of it here, but Elon Musk is supposed to have completed his deal to buy over Twitter and to take it private just in the past few days. Here's the thing about Apple. Apple up 4% as the market digests earnings beat compared with lower iPhone sales. So I suppose Apple's business is not simply the sales of the iPhone, it's also sales of apps within their Apple Store, and a whole range of other things that to deal with computing. You've got your iMacs, iPads, all that sort of thing, which I suppose actually whenever Apple first kind of came to public knowledge, it was the sort of all-in-one computer that they had brought out. I don't know what it was called. It had an integrated disk drive just underneath the screen, and a single button mouse, if I remember rightly. and at that time that was what they were known for. And then obviously in more recent times, they have expanded their product range. They probably, I would say, if you were to ask a younger person these days, what does Apple do? I would expect the first thing they will point to is the iPhone. That's probably what they're most known for these days. But don't forget, it's a bigger business than that, and they have a lot of other products as well. Amazon troubles ahead. Amazon down 10%. So another big tech company. To be honest, the comment there, forecasting weaker quarter over strong dollar and economic uncertainties, that's really just talking more about the market as a whole. I don't think it's a particular reflection on Amazon. No doubt it's an international company, so I suppose where the dollar is that much stronger than other currencies, you might expect the business maybe in some of those other regions to suffer. But I don't think there's any great fear for Amazon as a whole. That's just a note there about the change back to UTC, GMT. What else do they call it? Greenwich, Greenwich Mean Time. So the daylight summertime has ended. So China faces outbreaks. Hong Kong 50 down 3.3%, reaching 2009 levels amid new COVID outbreaks in China. I'm not going to say anything about that right now. So if you did read the title, I think I put that I am an indexer, not a gambler. And that was kind of in response to various spam tweets that I've been receiving from people online trying to the scam seems to be to pretend that they are going to take money from you to invest it on your behalf into Bitcoin or some other cryptocurrency. My suspicion is that if you were ever to send any money to these scam artists, that it'll never be invested in anything, and it'll simply disappear off to whichever bank accounts they are using to then hop it forward, so that it ultimately arrives with them. So yeah, as I say, there's these scams are going about online. Not really sure where they are based at. I know years ago there were a lot of Nigerian scammers trying to con people online, and they were infamous for it. But as I say, I'm not sure if that's still the case or if this is actually coming from somewhere else. Actually, it'd be interesting to try to get an IP address or something from some of these people by one of the methods that you can use to get an IP address, just to see where do they appear to be. No doubt they might be working behind a VPN or something, and you might not be able to tell for sure anyway, but it's always worth a shot. So yeah, I'm an indexer, I'm not a gambler. I don't touch cryptocurrency. Now I do have to caveat that remark with the caveat that were I younger, in my 20s, maybe even 30s, I don't exclude the possibility that it might well be worth looking seriously at some of the cryptocurrencies. And I say that simply from the point of view that at that age you've got time to try a couple of things that are more risky. If you were going to use an investment vehicle that was sort of aimed at a particular retirement date, Historically, what they would do is, in the earlier days of the portfolio, they would take bigger risks. They would invest more aggressively, as they might put it, and the hope being that that could prove to be successful. And then as time goes on, the investment is changed to be more conservative in nature. So yes, if I were younger, I would not be against the idea of investing in cryptocurrency, or indeed some other more volatile investments than, say, the S&P 500 exchange traded fund, as I'm doing here. The reality for me is that I'm 46. I'm hoping to retire in another 9 years or so, and for that reason I'm not willing to take that kind of a risk. But yes, guys, if you do decide you want to take a chance on cryptocurrency, or indeed any investment that's maybe seen as a bit more volatile, I would say if you're young enough, by all means go for it. I would also caveat that by saying that I think, from memory, from reading what the gurus, if you like, the people who have made it big, I'm talking sort of billionaires here, what they have said about their investment portfolios and crypto, is that for the most part, most of them, and bearing in mind these are generally older people, I don't think most of them have actually gone into cryptocurrencies to an extent greater than roughly 5% of their total wealth. So, you know, on the whole, that is quite a small proportion of their wealth. If you were younger, you might choose to increase that a bit, but I would suggest that you don't go beyond 20% of your total wealth, even if you're in your 20s or 30s. And that is simply down to the fact that cryptocurrency has shown itself to be extremely volatile in the past, and it can be a rough ride if you're watching the market take a dive and bounce back up and maybe dive even lower than it had before. So unless you've really got the experience of investing and you're prepared for that roller coaster in the market, and hopefully not an emotional roller coaster, but for some it could prove to be that, then you can make your own mind up as to what you want to do, obviously, but that would be my thoughts. I would steer clear, unless I was quite a bit younger, and unless I was willing and prepared for a lot of market volatility. I'm just pulling this down a bit to look to see what the I've termed it before, the opportunity gap is at present. So currently the market here is trading at £63.66, and going by that trend line there, I would estimate fair value for the market currently, had it continued on its previous trajectory, to be about £74. So I think there is good investment opportunity at present, even if you weren't currently invested in the S&P 500 exchange traded fund. I'm going to go ahead and put in our weekly £120. As you'll know if you've been watching the channel over the past weeks and months, this is going to be a roughly 8-year journey, basically aiming to try to prove the FIRE methodology, in as much as the S&P 500 has been observed to provide on average roughly 10% annual return, and it must underline on average, and that's averaged out over, I can't remember if it was a 20 or a 40 year timeline. So as you can see, compared to this time a year ago, that is not the case. It's currently sitting near enough flat compared to a year ago, and indeed there are times over that time frame where the market has produced a negative return, and other times where it has produced much more than 10%. But the proven strategy from a mathematical or statistical point of view has been to invest in the market consistently, frequently, and over a period of time, and that results in dollar cost averaging whenever the market price falls below the average price that you have, and that is the strategy that's proven to grow your investment at around about 10% per year, and then when you get to 25 times your annual expenses, so not your annual income, but 25 times your annual expenses, then you will reach your FIRE number, which is the figure at which you should be able to consider yourself financially independent. From there, you could choose whether or not to continue to work, or whether you wish to retire, and hopefully retire early. And then the theory behind that is that at that point you would be able to withdraw annually 4% of the value of the portfolio, and that's known as the safe withdrawal rate. And even taking into account market fluctuation, that 4% safe withdrawal rate should provide you with enough growth in the rest of the portfolio to cover itself at least for 30 years. So as I say, I'm doing this over an 8-year period, simply because that's the amount of time that the money available in the practice fund for Trading 212 will stretch to. I've got an Excel sheet set up already. You'll see that elsewhere on the channel, and that's got the basically the figures for predicted growth over the 8 years, and if that were extrapolated, if it works out, then you would be able to achieve financial independence within a reasonable period of time. But I'm not going to open up the sheet just at the minute. So if we look on the right hand side here, we can see that we have invested the 120. The portfolio value is currently just under £3,800. The average price is currently sitting at £62.85, and for the day we are up 0.8% so far. So guys, I think in the just to mention it in the description for the video, I mentioned about the globalist agenda. I personally believe there is a globalist agenda that notably the World Economic Forum, led by Klaus Schwab, who has, as far as I can recall, co-authored a publication called The Great Reset, and has had a lot of input into the UN's Agenda 2030, and what they call Sustainable Development Goals. I believe that the agenda and the objectives of these globalists are to impoverish the rest of society, while they themselves make themselves richer. They talk about, the famous phrase is, "You will own nothing and you will be happy." Now, if you think I'm talking nonsense, type that into Google. "You will own nothing and you will be happy." Look it up, and then come and tell me I'm a conspiracy theorist. Guys, if you're interested in finding out more about the truth of what's going on, the truth of what the globalist agenda is, what the global elite are up to, what the World Economic Forum is involved in partnership with other organizations like the World Health Organization, the United Nations, the Global Alliance for Vaccination and Inoculation, I think it's called. Basically, Bill and Melinda Gates's foundation's creation. Then I suggest you get yourselves on to Telegram. Okay, you need to forget about trying to look for stuff on Google. You need to go to DuckDuckGo. You need to, that's for your searches, and for social media, to get unbiased, uncensored information, you need to get yourself onto Telegram. Now, as I mentioned before, there are scammers. You will be contacted out of the blue by various people trying to convince you to give away your money. That's no different to what it is on other social media platforms, and just be aware that that's what they're doing. Don't fall for it. Hold on to your money yourself. Get it invested. As J.L. Collins said in a podcast that I listened to recently, there are 3 things that you need to do to become financially independent, and that's, if you like, without necessarily trying to. The first one is stay out of debt. The second one is to live below your means. And the third one is to invest the surplus. And by doing those 3 things, you will ultimately become financially independent at some point or another. How quickly is really up to you. So just to recap, number 1, stay out of debt. Number 2, live below your means. And number 3, invest any surplus income. Guys, thank you for watching today. I hope you found it interesting and informative. If you like the content, by all means give us a like, hit the subscribe button, and if you want to be notified in the future whenever I post again or I'm live again, hit the bell notification. Thank you for watching.